Do I need a promo or anything?
Promo?
Yeah, I know this is the advantage. Do I need a promo?
No need promo.
Oh, this is
yeah, correct. Okay, then you can just present it itself.
okay, sure. Yeah.
Okay, thanks.
All right. Hi everyone. Welcome to the webinar. I'm Joanne. I'll be your host for today. Right, and so today we have our live trading session again. All right, so take note of our disclaimer here. So this is our group of analysts, and I'm here as well. All right, hi, the Ravelio channel. Nice to meet you. So today we'll be doing some live trading analysis on fundamentals and technicals. All right. All right, so we can start with what happened. Speaking of what happened, so basically let's talk about what happened in the US session. Now, in the US session, the US core PCE price index indicated inflation growth in the US, which is likely to spur the Federal Reserve into further rate hikes. Now, the US consumer sentiment rose slightly despite inflation worries continuing to dominate the consumer attentions. Now, equities ended the trading session higher, which had brought further downside to the DXY. So now what happened to the Asia session? So basically with no major news events during the Asia session, and as downside pressure on the DXY is likely to persist, look for further US dollar weakness through the trading session. Now, let's zoom right into the DXY. Now, once again, we have the three components: the key news event, the what we can expect today, and our next 24 hours buyers. So, all right. Firstly, we have the key news event today, which is the ISM manufacturing PMI. So, what can we expect from DXY today? So during the trading session on Friday, the DXY traded with significant volatility as the price attempted to break below the 106 price level. Data from the core PCE price index indicated continual inflation growth in the US despite a slowdown in the economic activity, with US GDP showing a negative 0.9% contraction. Currently trading at the 105.50 price level, look for further downside confirmation on the DXY if the price is able to close below 105.40 to signal a break of the support level. The next support level for DXY is at the 104.50 price level. That is what we can expect today. Okay, right. And then let's add on with some central bank new notes from for the DXY. So for the central bank notes, we have hike rates by 75 BPS to take federal fund rates to 2.50%. The next meeting is on the 22 September 2022. And there's a balance sheet reduction plan to continue as 60 billion for the treasuries and 35 billion MBS over a 3 months time frame. All right, so I've spoken about what we expect today in key news event. So let's talk about our next 24-hour buyers. So for our next 24-hour buyers, we are weak bearish. All right, let's look at the DXY for a while. Okay, so for our DXY, you can see we have our ascending trend line and our descending trend line right here. This descending trend line does seem that valid. Let me just, pardon me. All right, so basically we have our ascending trend line, and notice that price has broken out the ascending trend line. This gives us the bearish bias. We put our sell entry right here where there's the overlap resistance, and then we have our take profit at a pullback support and our stop loss at a pullback resistance. So basically we are bearish that and then we expect price to rise to the sell entry before dropping to the take profit. And notice how the price level is below the Ichimoku cloud. So what did this tell us? So this basically confirms helps with a confirmation confirms our bearish bias. All right. Now once again, let's go back to the DXY. So now let's talk about the Japanese yen. All right. So Japanese yen, three components again. So now so for our first component, which is the key news event today, there's no major news event today. And what can we expect from JPY today? So what can we expect today? The USD JPY continued to its slide towards the key support level of 132.50 as the DXY weakened due to the weaker than expected GDP data and continual inflation growth in the US. Early in the trading session, the USD JPY traded lower in an attempt to break the support level. If the price closes below 132.30, further downside can be expected, with the next support level at 130.70 a possible target. Now, let's look at our central bank notes for the JPY. Now, see the policy settings has been kept unchanged, with rates capped at negative 0.10%. Now, the central bank reiterated that the rates will stay low for the foreseeable future. And won't hesitate to add stimulus if the economy needs it. So now let's look at the next meeting. So when's the next meeting? The next meeting is on 22nd September 2022. So what's our next 24 hours bias? So for our next 24-hour bias, we are medium bullish for JPY. All right, okay. We talked now about JPY. Let's go straight away into the charts. All right, so for USD JPY, next one. Right, so you can see bearish we have a bearish bias here, clearly, because we have an ascending trend line there, and the price is already broken out ascending trend line, so bearish bias. Besides the ascending trend line, we also have our key levels with resistance and support level. This is our first, second. All right, so basically you can see like how we have two resistance level and one support level. So what we are looking here is basically the price movement of the USD JPY, and so as you can see, the we have our Fibonacci levels there, as well as to refine our levels. So but then the thing is, why did we choose these levels? So for our first resistance, we chose it because it's a pullback resistance. Our second resistance, we chose it because it's a overlap resistance. Overlap, why? Because there's two swing high touching the levels. Now, next we have the first support. So we have the swing low support. Okay, so swing low support, we have our extension actually right here, demarking the helping to refine the zone further, the 161.8 extension here. All right. So lastly, we have our indicator, which is the Ichimoku indicator. Now, the price is moving below the Ichimoku indicator, so this confirms our bearish bias. So we're expecting the price to like maybe hit, reverse off, or maybe break through the first support. I'm not sure what happened there, but we're expecting a bearish bias towards the first support. Now that we look through our USD JPY, we can look at our now that we look at our GDPR, we can go back to our slides and let's see our next forex pair. All right, okay. So next you have gold, the commodity. All right. Okay, once again, same thing as usual. Three components, key news event, what can we expect today, and our next 24 hours bias. So for key news event, well, there's no major news event today as well. What can we expect today from gold? So we are highlighting the inverse relationship between the gold and DXY as the DXY weakened significantly through the last week. Gold climbed steadily higher towards the 1770 resistance level, and look for price to consolidate at the resistance level before a potential breakout to the upside towards the next resistance level of 1800. So what's our next 24-hour bias? Our next 24-hour bias is medium bullish. So we are actually medium bullish on gold. Okay, so now that we look at our gold, let's look at the charts for gold. Go. Anyway, go. Let's look at our. All right. So go. Okay. So go basically. We don't have any trendline channels instead. So but how do we see our bias? Our is a bullish bias. As denoted by how the price is moving above the Ichimoku indicator. So when price is moving above the Ichimoku indicator, what's our bias? It's bullish. Now, so next we have our you can see our buy entry and our take profit and our stop loss. So why is our take profit there? It's because it's a pullback resistance. Yeah, and is also refined with our 61.8 Fibonacci retracement level. And we also have a buy entry. Now the buy entry is refined with our 50% retracement level, as well as our 100% Fibonacci projection. So basically, it's a right. It's refined further by two different Fibonacci retracement and projection. Now we have a stop loss. So why is our stop loss there? It looks like a overlap support. So it's overlap support, and is an overlap support. Right, it's an overlap support. So basically, it's an overlap support here. But it's an overlap support that denotes our support level. Now, so basically, what are we looking here? What's our analysis here? So as mentioned, price is moving above the Ichimoku indicator, so it is bullish. Now, so what we're expecting here is basically for price to, since we have a bullish buyer, price to rise to the buy entry. Once price has once we're upside confirmation that price is broken through our buy entry, we would expect bullish momentum to carry price to take profit levels. So that's our analysis here. All right. So now that we have our analysis, now that we're going through a couple of charts, let me ask you guys, do you guys have any questions? Is there anything you're unsure about regarding to the with regards to the charts? Well, hello. I noticed a few new people. So hello, the Rubbly channel, Ravelo channel. Hello, Nisa. Hello, Ledger, Alha, Bib, and yep. All right. Welcome to the webinar, everyone. All right, good. So I'm glad to see we are done so far. All right, then let's move on to our next forex pair. All right, okay, we're done. Go. Now we let's look at our next currency, euro. All right. Okay, for euro, same thing as the previous two few currencies and commodities. So basically, three components here: key news events. What can we expect today? The next 24 hours buyers. Now, for the key news event today, what we have here is actually a Euro final manufacturing PMI. Now, so what can we expect for euro today? So the EUR USD trade is just below the 1.023 level in the lead up to the release of the euro final manufacturing PMI. Okay, for the euro final manufacturing PMI, our forecast was 49.6 data release, which is expected to indicate a contraction in the manufacturing industry. So the euro could trade lower briefly before a move higher towards the next resistance level of 1.0370. So let's take a look at our central bank notes for the euro. Now, for the central bank notes, so the euro has actually raised rates by 50 BPS, basis points, for those who are unsure the acronym. Now, so when's the next meeting for the euro? The next meeting is actually on 8 September 2022. Okay, so we know our key news, we know what can we expect today. So how about our next 24-hour bias? So our next 24 hours bias is actually medium bullish. Okay, great. We know our fundamentals. Let's go dive right into our technicals. Euro USD right here. Okay, let's look at Euro USD. Okay, let me make it clearer for you guys. How about that? Let's make this opacity a bit lower. All right. Okay, so basically we have our Euro USD here. So in the Euro USD here, we can actually see some form of a wedge there. So well, this trend is not valid, but yeah. There might be a way, but this trend line is not really valid. So let's keep it outside for now. Let's look at the ascending trend line. So basically, ascending trend line, price is ascending. Price is actually ascending, and so since price moves along the ascending trend line, we have a bullish bias for analysis so far. But we need to confirm our bullish bias, but that comes later. For now, let's plot our, let's insert in our levels, our support levels, our resistance levels. Okay, so firstly, we have our first support. So our first support is over here, as you can see in the chart. But why is it there? It is a overlap support. Notice the two swing lows here and here. So two swing lows. So this becomes our overlap support. Then we have our first resistance. Our first resistance is over here where the swing high is. So our swing high, so we have first resistance there at our swing high, and our second resistance over here at our pullback. So basically, these are our three levels, two resistance and one support. So, but then the thing is, how can we refine it? We can refine it perhaps through the Fibonacci levels. See, you can find it here. Okay, we have a Fibonacci, a nice, see, we can see like a 50% Fibonacci retracement and 61.8 Fibonacci retracement right here. So these Fibonacci levels actually there to help you refine your level further. All right, so once you have Fibonacci levels to refine our resistance level and our support level into zones, what can we do next? What's our step to confirm our bullish bias? And it is our Ichimoku. So let's take a look at Ichimoku. Our price is actually moving above the Ichimoku. So when price is moving above the Ichimoku, we have a bullish bias. Okay, so let's take a step back and look at our analysis. So what do you think this analysis is? What's going to be the result of the price movement according to our analysis? Now, the way I look at it, our price analysis, two case scenario. First case, our price bullish momentum breaks the first hits the first resistance. So once we upset confirmation that price has broken the first resistance structure, we will expect bullish momentum to carry price to second resistance. So that's our case one analysis. Okay, but we have a case two. So what is case two? Case two is simply that price maybe drops or reverse off the first resistance to the first support. And notice in this case, it breaks through the trend line to hit the first support. So yeah, so I'll say our analysis here is okay, it's pretty strong. Okay, good. Okay, all right. Now, that's our two different case scenarios for our Euro USD. Likewise, as you have seen from the previous charts, we have stop loss and take profit, first resistance, second resistance, and things like that. We always have like this two case for each analysis. All right. Now that we're done with Euro USD, let's jump back into our slides. So what's our next currency? Is our Swiss franc. Okay, Swiss franc. As usual, from the previous for the rest, we have three components. So our first one is key news event. Our second component is the what can we expect today. And number three, our next 24 hours bias. All right, so basically, firstly, we have the key news event. Key news event being there's no major news today. meaning there's no major news event today. Our second component, what can we expect today? What can we expect from CHF today? So the USD shift CHF trades at 0.95 price level as the decline stalls at the key support level. Look for weakness in the US dollar and for the DXY to break below the 105.50 level to signal further downside potential on the USD CHF. If the price closes below the current support to signal further downside potential, the downward move could continue towards the next key support level of 0.94. All right, okay, that's what can we expect today. Let's take a look at our central bank notes. So central bank notes for CHF, there is a surprise rate hike by 50 basis points to negative 0.25%. The next meeting for the CHF is on 22 September 2022. Okay, now that you know the key news event, you know the what can we expect today. Let's take a look at our next 24 hours bias. Next 24 hour bias is medium bullish. Okay, so all right, so our CHF is right here. Okay, so for our CHF, there's a couple of things maybe we can look at. So basically, first thing, well, the first thing I want to look at is basically, is this a bullish or bearish momentum? Okay, well, spoiler alert, it's bearish. Now, but why is it bearish? Notice how the price is moving below the Ichimoku indicator, Ichimoku cloud. Since it's moving below the Ichimoku indicator / cloud, it is we have a bearish bias on this price. Okay, so now that we have bearish bias, we need to denote our key levels. So first key level, stop loss, where do we put it? Here. Why do we put it here? Pullback support, pullback resistance. But the thing is, that's not all. We can refine it. How do we refine it? We refine it using Fibonacci levels. So as you can see, there's a Fibonacci level to refine it there. And then we have our intermediate resistance. Our intermediate resistance is right here. It's a pullback resistance. And then we have our sell entry. Sell entry, what do we put it here? It is a pullback resistance. So we have pullback resistance here. That's our sell entry. And then finally we have the take profit. So the thing is, take profit, you don't have any swing high, swing low, overlap, pullback, any support resistance level for it. So, but then the thing is, how do we find our take profit level? Simple. We use extension. Now there's a 127.2 extension right here for our take profit. Okay, quick question. Pop quiz. Anyway, basically, so 127.2% extension. In what case can you use extension? So when price hits, so basically you can see we are projecting we have our extension here. We draw our Fibonacci here, and our extension here. So for this price level, how far must it hit in order for us to have an extension? Can it hit just 30%, 30%, 40%, 50%, 60%? How far must it go in order how far must price go in order for us to have an extension? What do you guys think? Okay, if you guys are not sure, then the answer is actually 50%. So price might actually hit 50% in order for us to have a valid extension. The same thing goes for expansion. Only when that price hits the 50% can then No. It's not 60%, it's 50% actually. Yeah, 50%. So basically, let me, yeah, so basically, yeah. So only when price hits the 50% thing, then can we have an extension, expansion, etc. etc. All right, so basically you can look at this here. Did price hit 50%? Of course it did. Yeah, it just breaks through the 50% everything. Yeah. Anyway, uh for 50, so anyway, price is broken through the 50%, and then we can have an extension 127.2%, and that's where I put our take profit at. So that's our USD CHF. How do we expect it to go? Basically, we expect the price here rise, hit, sell entry before dropping down to take profit. That's our case one. Case two, price maybe it breaks the sell entry, rise to the intermediate resistance. Once it has the upside, once it breaks the sell entry to the upside, we will expect bullish momentum to carry the price to the intermediate resistance. Should it break the intermediate resistance, we have a further bullish bias that will hit our stop loss. All right, so that's our CHF. Once again, let's jump right back into our charts. Now let's look at pound, GBP. All right, for our GBP, pound, three components, same again, key news event, what can we expect today, and next 24 hour bias. All right, so for key news event, we have one key news event, the GBP final manufacturing PMI. Now, so what can we expect today from GBP today? So the GBP USD is expected to continue trading higher along the uptrend, with the resistance level of 1.2240 likely to resist further upside move. Now, look for the GBP USD to break above the resistance level to signal further upside towards the next resistance of 1.24. Okay, so now that we have that, let's bring out the central bank notes. Central bank notes for the GBP, we have firstly the interest rate is currently at 1.25% with possibility of 50 BPS basis points rate hike to come. Now the peak inflation revised to more than 10%, adding to stagflation fears. There's a possible GDP contraction in 2023. Now, quantitative tightening plans to be updated at the August meeting. So when's the August meeting? The next meeting is on 4th of August, 2022. We have talked about the key news event. We have talked about what we can expect today. Let's go right ahead to our 24-hour bias. 24-hour bias is medium bullish. Okay. GBP USD. All right, fantastic. All right, fantastic. We have our GBP USD charts right here. So basically, okay, so basically, two resistance level and one support level. All right, okay, so basically, what do we expect here? Now, our first support, why is it there? Because it's a pullback support. Our first resistance, why is it there? Because it is a pullback resistance. Notice the large swing low here, nice swing low, And yeah, that's our resistance level. All right, then next we have our second resistance. Second resistance there, it calls the swing high resistance actually. Now, actually, yeah, yeah. Okay, so now that we have our you guys have seen the various resistance levels and the support. Uh these are levels, but in the first place, why do we put our levels there? Uh before that, we want to see whether it's a bullish or bearish. And in this case, it's bullish. Why? Because we have ascending channel. Price is moving in an ascending channel plus. It's above the Ichimoku indicator. So bullish channel. All right. Just a quick FYI to everyone who doesn't know how to use the channel. So basically, a channel requires two hits on two swing highs and swing lows. How it works basically, let me show you guys an example. Green. Now, one, two. Okay, you can see that. There's two swing high, two swing low, making this a valid channel. But it doesn't have to be swing high, swing low, swing high, swing low. It can be swing low, swing high, swing low, swing high, swing high, swing high, swing low, swing low, swing low, swing low, swing high, swing high. It can be any order. Okay, about the channel. All right. So now that we got our concept or channels right. Okay, let's look at our chart. So basically, what we expect here is basically price to drop to the first resistance before rising to our second resistance. Our bullish price is that, and it's confirmed by our price moving above the Ichimoku indicator. Now, the ideally, you also want to refine this with Fibonacci levels to make it much more accurate. But in interest of time, let's move on to our next currency. So what's our next currency? AUD. Right, for AUD, the Australian dollar. Do you have key news event? There's no major key news event. What can we expect from AUD? So anticipation for a third consecutive month of 50 BPS rate hike from the RBA gathers pace with decision due on Tuesday, 2nd August. Further upside can be expected as markets are priced in the rate decision. However, with the interest rate likely to climb to 1.85%, this is likely to raise the risk of an economic slowdown as consumers pull back on spending and the housing market reverses. Now, look for the AUD USD to retrace briefly to the 0.6960 support level before trading higher towards the near-term resistance of 0.7030. You guys now know what to expect for AUD today. But let's look at the central bank notes. Now, for the central bank notes, there's a possible 25 to 50 BPS basis point rate hike. So when's the next meeting for the Australian dollars? It's on 2nd August 2022. So now that you guys know the key news event as well as the what we can expect today. What can we expect today? So we have our 24 hours bias. So what's our 24 hours bias? Our 24 hours bias is basically weak bullish. Now for the AUD USD, wow. All right, okay. So firstly, when we look at the chart, the first thing we want to do is find the momentum. Is it a bearish momentum, bullish momentum? It's a bullish momentum in this case, as just like the previous chart we look at. There's a ascending channel, and price is also moving above the Ichimoku indicator. Bullish bias, instantly bullish bias. Okay. Now let's look at our let's look at our Fibonacci levels. I mean, let's look at our key levels. So so actually should this if we look at this chart, we would see that we'll have our stop loss over here, pullback support, buy entry, again another pullback support, take profit, swing high, resistance. So expecting then we have our okay, we don't have a there, but it's floating now. Okay. Now look at this. You can see a 61.8 retracement level, right? Our refining our take profit there. So our take profit become much more accurate. Okay, so oops, yeah, much more accurate. Now so this is our AUD USD analysis. So maybe if price breaks past the take profit thing, perhaps price could really ideally price could even reach this level here. If we ideally price could rise here, but that's a bit far for our this is a bit far for a trade to take in a day. So for now, yep, this is our analysis for AUD USD. Without further ado, let's jump right back into the slides. Now, next we have our Kiwi dollars. Okay, Kiwi dollars. Once again, three components. Key news event, what can we expect today? And next 24-hour bias. So for our key news event, there's no major news event. What can we expect today? So the NZD USD trades higher at a near-term resistance level of 0.6290 following renewed DXY weakness. With no major news events for the NZ today, the price could consolidate at this level briefly before following the trend towards the upside. Look for potential move higher on the AUD USD to bring the NZD USD along with it towards the next resistance of 0.6325. Let's look at our central bank notes. Central bank notes cash rate stands at 2.5% following a 50 BPS rate hike in the July meeting. We can expect they expect a near-term inflation to rise with the lower economic activity. So when's the next meeting for the Kiwi dollar? It is on 17 August 2022. The next 24 hours bias is weak bullish. Okay, Canadian dollars. Oh wait, no. Let's look at the chart first. Okay. Right. So for our NZD USD, it's quite apparent here. Setting trend line here. So and also price is moving above Ichimoku. We have a bullish bias. So then next we look at our key levels. Take profit is swing high resistance. Buy entry is pullback support. So and then we have intermediate support here, and finally our stop loss is over here at another overlap support. 50% retracement noted here, and 78.6% retracement is also noted right there. Now, what we expect is price to rise from the buy entry to the take profit, and that is our analysis. Also, notice the RSI is following along a ascending trend line. This further confirms our bullish bias. Okay, let's look at our Canadian dollars. So Canadian dollars, okay. Again, once again, three components for Canadian dollars. Key news event. There's no major key news event today. What can we expect from Canadian dollars? The USD CAD ended the trading week at the 1.28 support level. A further downside move could be likely as the DXY looks to set up for another move lower from the 105.50 support level. If the price closes below the 1.2780 level, the USD CAD could trade lower towards the next support of 1.27. Okay, let's take a look at our central bank notes. Central bank notes, there's increased rates by 100 BPS, taking interest rates to 2.5%. There's indicated further rate increases likely. The next meeting is on 7 September 2022. Now, let's take a look at our next 24 hours bias. Our next 24 hour bias is wick bullish. USD CAD. Now, USD CAD, okay, great. We have a descending trend line and price is moving below the issue indicator, bearish bias instantly, and then levels are right here. Second resistance is pullback, overlap resistance, first resistance, pullback resistance, and then our first support is at the 161.8% Fibonacci extension. All right, next we so this is how it works. So basically you expect a price to reverse back, to hit the first resistance before dropping to first support. All right, now next we have our, back to the thing, we have our crude oil. So for crude oil, we have key news events today. So and what can we expect today and the next 24 hour bias? The same three component. Now for key news event, we have no major news events. So what can we expect for oil today? Now the upcoming OPEC meeting is likely to end with a pre-agreed output plan as Russia applies pressure on the OPEC to resist increasing production levels. Expect a brief reversal on the Brent and WTI from the 109 and 102 resistance level respectively. As oil prices continue trading in a wide range, Brent and WTI could trade lower towards their support levels of 103 and 96 prior to the OPEC meeting. So now that we know our key news events and what can we expect today, let's look at our next 24 hour bias, which is the wick bearish. Our next 24 hour bias is wick bearish for crude oil. All right, okay. Now that we're done with our slides, we can look at the charts of our crude oil. All right, crude oil. So for crude oil, well, ignore the brushes, but anyway, we have a descending trend line, and price is broken out of the descending trend line. So what happens? We have a bullish bias. So for our bullish bias, we expect price to so we have first, second resistance. Our first resistance we plot our key levels here. Why do we plot our key levels here? First resistance, we put it there because there's a nice pullback. No, there's a nice overlap resistance. And then for our second resistance, we have pullback resistance. And then for our first support, we have a nice overlap support. So this level lines up nicely. And then we even have an intermediate support right here. There is a pullback support. Now, so when you look at this, what's our case 1 and case 2? Case 1, easy. Price rises, we are, as mentioned, bullish bias, right, from what we have spoken. So case 1, price rises to the first resistance, and now should we have upside confirmation that price has broken the first resistance, we will send bullish momentum to carry price to the second resistance. Second resistance is where the pullback resistances are. Now, alternatively, price could drop to the intermediate support where the pullback support is. Then if we have downside confirmation that price has broken the intermediate support, we expect bearish momentum to carry price to the first support. So that's our for all. So then we've gone through all the different charts for the in the slides, and as well as the technical analysis and the fundamental analysis. Let's review a few more charts, investment assets, basically. But this only had charts. So yeah. So first up, we have DJI. DJI, easily, we can immediately see an ascending trend line. Price is moving above the Ichimoku indicator. 2 support levels and 1 resistance level. Now, why do you put a resistance level there? Because that's our swing high resistance. And we also have a negative 61.8 Fibonacci expansion there. So you guys recall what Fibonacci percentage must the price hit in order for the expansion to be valid? If you guys recall this from just now. All right, if you can't recall, it is 50%. Now, price is hit. As mentioned, price is certainly hit 50% over here. And then that's why you can expansion, we have expansion up to here. Now, our first resistance is a swing high resistance. Our first support is a pullback support. Our second support is a pullback support as well. So as mentioned for the bullish bias, so we expect we see price to drop to first support before rising to the first resistance. That is how analysis for the US 30 DJI is. Next, we have next we have SPX. What is SPX in case you guys are not really that aware of? SPX is basically S&P 500 index. So here, right here, we can see how the analysis works. So basically, while we don't have a trend line channel, etc. for this, we can see that our price is moving above the Ichimoku indicator. So since price is moving above the Ichimoku indicator, we have a bullish bias for our price, for our analysis as well. Now, what do we put our levels there? We have 2 support levels and 1 resistance level. So why do we put our resistance level there? It's a swing high resistance with a 100% Fibonacci projection. And we have our pullback support for our first support and we have a pullback support for our second support. So we expect price to rise from the first support to the first resistance. That is our S&P 500 analysis. All right, now for DAX index, it's indices as well. So it's another index. We have US 30, SPX, DAX, all indices. All right, now look at DAX index. So DAX index, okay, once again, we look at the chart. Bullish or bearish momentum, bullish momentum because price is moving above the Ichimoku indicator. So first support is at overlap support. Swing low here, swing high here. And second support is a pullback support. Why? Swing high here. 61.8 projection here. And then we have the first resistance, which is a overlap resistance here and here, swing high, swing low, and our 78.6% retracement level. Yep, to refine our key levels. This is purpose actually. Anyway, since we have a bullish bias, so for analysis here, what do you guys expect to happen? All right. So what we expect to happen is basically price to drop to first support. Then once price drops to first support, it will rise to first resistance. That is our analysis here. All right, let's look at something more trendy. Let's look at Bitcoin. Now for Bitcoin, instantly we can see a ascending channel. And also price is moving up. So ascending channel, we have a bullish bias. Then we have key levels. Two resistance levels actually and one support actually. The buy entry is a resistance level. So anyway, we have our buy entries over at the pullback resistance. Our take profits at the 161.8 extension at 100% projection, where they are, and our stop loss is at a pullback support, also as a 50% retracement here, and a 61.8% projection there. So this helps to refine our key levels. Now that we have a bullish bias, we can confirm it using our indicator. In this case, we use the Ichimoku. Since price is moving above the Ichimoku indicator, we have a bullish bias that price will rise to the buy entry. Once we have upside confirmation that price has broken the buy entry, we'll expect bullish momentum to carry price to take profit. So that's our analysis. And then last but not least, we have Bitcoin. Well, not Bitcoin, but Ethereum. So Ethereum, just like Bitcoin, price is moving above the Ichimoku indicator. We have a bullish bias, 3 levels. What are the 3 levels? First level, first resistance, and then 2 support levels. First support, second support. So first resistance is at a swing high, and also at a 78.6 projection, if I'm not wrong. Yep, correct. And then we have a first support is a pullback support and a 23.6% retracement. Second support is at our swing low support and is a 61.8 retracement level. So what's our analysis here? Our analysis is basically that price will drop to the first support before rising to hit the first resistance. That is our analysis here. All right. So I hope you guys has learned something from live trading today, and hope you guys has gained some knowledge. And if you are interested, feel free to join us for our next Vantage webinar. Thank you for attending our webinar, and goodbye, everyone.